do have some positive news for the entire market coming out of Ethereum too, and that is interest in Ether options rises to record as traders bet on merge. A few hedge fund names have been large buyers of the ETH calls, one trading firm noted. The number of open positions in ETH's options market has reached a record high as an updated timeline for Ethereum's long-awaited supposed bullish merge has spurred demand for call options. Open interest, or the number of option contracts traded but not squared off with an offsetting position, stood at a new lifetime peak near 4 million, according to data from major exchanges, including Deribit, tracked by Swiss-based derivatives analytics firm Levitus. The previous peak, around 3.5 million, was registered in the second quarter. The desk has traded an incredible amount of ETH calls this week, over 250,000 ETH notional. The Singapore-based options trading giant QCP Capital noted in a Telegram chat. A few hedge fund names have been large buyers of ETH calls, and the overwhelming demand has brought September volumes up 100%, the trading firm said, adding, "We expect this demand to continue as we approach the merge in September." Martin Shang, an options trader from Pulsar Trading Capital, said, "There are big players in September and December expiry, betting on upside in Ether. Recently, the spread between prices paid for puts relative to calls has narrowed sharply, indicating renewed demand for calls. A call option gives the purchaser the right but not the obligation to buy the underlying asset at a predetermined price on or before a specific date. A call buyer is implicitly bullish on the market. A put option represents a bearish bet." The optimism has returned to the Ether market ever since Ethereum developer Tim Biko announced September 19th as a tentative date for the completion of the merge. As the name suggests, the upgrade will merge Ethereum's current proof-of-work blockchain with a proof-of-stake blockchain called the Beacon Chain, which has been running since 2020. The transition is considered bullish for Ether. "We're big fans of Ethereum as an asset. Lately, we're bullish on the idea that the merge will create a wave of price appreciation after creating strong deflationary pressure in the form of structural demand," Jack Newald, founder of Crypto Pragmatist newsletter, wrote in Wednesday's edition. While inflation in global economies remains at high levels, ETH will likely become the largest deflationary currency after the merge. Lucas Atumaro, head of research at Into the Block, said in a research report published on July 23rd, "The amount of Ether issued will drop by approximately 90%, as will it no longer be needed to incentivize miners." This is going to get really, really interesting too, because nobody that is staking ETH is going to be able to withdraw the ETH. I think early on, like running up to the merge, there may be some, retail pushback once everybody realizes they can't withdraw the ETH. But up until then, I think we're going to just see ETH skyrocket. Now, not financial advice, but all the way up to the merge, I just think we're going to continue to see ETH kind of outperform a lot of the other big players, along with probably Ethereum Classic, because you will have that side bet going on with Ethereum Classic. So both of these coins are what you're looking at just in general from a retail investment standpoint. Ether traded at $1,620. It's up to $1,654 right now at this time, representing a 50% gain for the month, according to CoinDesk data. So what are we seeing? We are seeing, basically, just to give you guys an idea, a lot of the shorts getting liquidated and basically bullish sentiment, there we go, surrounding Ethereum in general. And I think that's obviously good for the market as we see it. The big question is, though, and we'll get to it right after I drink some water, is are we seeing, crypto in general, specifically Bitcoin, because we saw everything's kind of green today after a 75 basis point hike or a BPS hike yesterday. We're seeing it all green, but we are seeing traditional markets in the GDP still fall, right? So now, are we starting to have the realization of cryptocurrency based on its fundamental principles from the Bitcoin white paper and the original reason for it being created during after the 2008 financial crisis? Is it starting to kind of spread its wings as kind of that hedge against recession. GDP falls further in Q2, fueling talks of a recession. A widely used technical definition says that 2 consecutive quarters of negative GDP means the economy is in a recession. But be careful because, of course, the Fed is redefining that and saying that no, it doesn't. Or the government is in general. Gross domestic product declined at an annualized pace of 0.9% in the second quarter, marking 2 consecutive quarters of economic contraction. While the report on Thursday morning was worse than economists' forecasts of a 0.5% contraction, it was slightly better than whisper expectations for a decline of 1% or more. The Federal Bank of Atlanta's GDP Now tracker, for instance, predicted a 1.2% decline in GDP in the second quarter. Bitcoin, which has risen sharply in the wake of Wednesday's downgrade of the economy by the U.S. Federal Reserve, slipped $200 following the release of the GDP figure and was recently trading at $22,800. It's already up to $23,237, by the way. The GDP report cited decreases in private inventory investment, residential fixed investment, federal government spending, state and local government spending, and non-residential fixed investment that were partly offset by increases in the exports and personal consumption expenditures as the main drivers for the decline. The contraction follows an unexpected decline in the economy in economic activity of 1.6% in the first quarter, which fueled fears of recession. One widely used definition for recession is when GDP contracts in 2 consecutive quarters. However, many economists and even Federal Reserve Chairman Jerome Powell at press conference on Wednesday have refrained from calling a recession because other factors like the labor market show signs of a strong economy. Both the government and the Fed defer to the National Bureau of Economic Research to declare a recession, which takes into account employment, personal income, and industrial production in addition to GDP. I don't know that I believe the narrative that the labor market is good because I've been looking into the labor market. I'm not necessarily sure that it is good. And I've been hearing a lot more about a lot more layoffs as well going on. So I'm not necessarily sure that this is actually like they keep saying this about the labor market, but it's confusing to me because, like I said, if I look at it objectively and I go out into the world and start looking at what's available and, what you get paid, your income rates like they're talking about here, how that paces out with, the inflation. I'm not seeing a strong labor market necessarily, unless we're just talking about everybody working for Amazon. I do not think the U.S. is currently in a recession, and the reason is there are too many areas of the economy that are performing too well. See, I call BS on that, pal. That's what he said during a press conference on Wednesday. You tend to take first GDP reports with a grain of salt, except we're on the second one, Mr. Powell. Central bankers on Wednesday raised the federal funds rate by a 0.75 percentage point or a 75 basis points in an effort to slow the economy and curb a 4-decade high inflation. Traders interpreted the statement by the rate-setting Federal Open Market Committee as dovish, with stocks jumping after the announcement. Bitcoin saw its biggest single-day gain in 6 weeks, surging 8% on Wednesday, and Ethereum rose almost 12% to slightly above 1,600. Even if the economy isn't in a recession, raising interest rates for the 4th consecutive month could certainly lead to one. And Powell has repeatedly said that a recession is a possibility. He's also said that we don't understand inflation. He said that straight up, but that's okay. The Fed can't say we're trying to push the economy into a recession, but in my opinion, they are, because that's the only thing that's going to slow down prices. Bob Lucino, chief strategist at Path Trading Partners and co-portfolio manager at Stock Think Tank, said, "They have no control over Russia, which is part of the inflation problem, and they have no control over the supply chain, which is part of the inflation problem. The only thing that they can do is try to slow demand," he said. And that is one of the things that we really have to get back to and pay attention to as well, is that because of all of the outsourcing that's been done by the Western countries, you are completely dependent on Russia. We talked about this as well earlier this week with the BRICS, which is basically a consortium of countries that are trying to set up a another reserve currency. And if you really pay attention to the US dollar and what makes it strong, it's because it's a reserve currency. Most of it's backed by oil, and the fact that Saudi Arabia forces everybody to pay for oil in the US dollar. And that is slowly going away with talks of the yuan being allowed to be purchased oil from Saudi Arabia. That would take away 20% of the strength of the dollar right away. And then you add on this secondary reserve currency, which is being pushed. That could be very impactful on Western countries, especially the United States, and the value of the US dollar. So pay attention to all these things that are happening, because it does mean that the value of the dollar in your bank account is decreasing. And is Bitcoin the hedge against that? I don't have the answer for that for you right now. I want to say yes, right? That is where I lean towards. And it does seem to be proving itself to be a strong asset in the very least. And like I've said before, based on the previous halving cycles, it's not performing any differently than I would have expected it to, regardless of the larger or wider macroeconomics. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.